What's going on, guys? Welcome back to another video. In today's video we're going to talk about AMC GME as well as the overall broader market. So today AMC was down for 8.82% for the day. It had a high of $16.88. The average volume on AMC is around 42.31 million, but today's volume was around 31.45 million, which has been going down significantly. And right now we don't have any good sentiment coming towards the overall broader market as well. Yesterday, after the Snap earnings, they gave a warning to the ad revenue, which dragged down the overall broader market today. Major big stocks like Meta, Google were all down today just on the news that the Snap released yesterday that their ad revenue might not meet the expectation. Now we have more big earnings next week, which will indicate furthermore downtrend into the overall broader market if the earning doesn't meet the expectations. Now let's come over to the GameStop. Now GameStop was down for 6.74% for the day. It had a high of $38.70. There has been a 4:1 stock split on GameStop. That's why the price has gone down significantly. Now the average volume on GameStop is around 13.97 million according to the new stock price. But today's volume was around 10.6 million. The volume was still there. It's not that dead. Usually the volume is very low in the GameStop. Every time there is some sort of a momentum in GameStop, then only we see some sort of a aggressive volume coming into the GameStop. But right now we are not seeing that much of aggression coming into the stock right now, because I personally believe the stock is a little bit overvalued. It might need to go come down a little bit, and then we can see a lot of retail coming into buying the stock. And next week is a very major week. Now the GDP is going to come out next week. Even the Fed is going to increase the interest rate next week. So it's going to be a very volatile week. I personally believe that we have enough of the upside so far. Now we're going to experience some sort of a severe downtrend into the overall broader market. Now we know that the inflation is very high. In order to control the inflation, Fed is going to increase the interest rate. Now it depends how much interest rate they're going to increase. If they increase too much, then on the 28th July, if we are in a recession, we might go further down in more recession if the Fed increase the interest rate aggressively. The Fed meeting is just before the GDP number that's going to be coming out on the 28th of July. So the Fed will try to get away this time by increasing the interest rate, and whatever the GDP is going to be, if we are already in a recession, that's what I personally believe, and that's going to be the scenario on the 28th of July, and we might experience some sort of a severe downtrend from there onwards. Now let's come over to the SPY. Now the SPY was down for 0.93% for the day. It had a high of $400.18. The SPY wasn't able to cover the gap. We were supposed to cover the gap, but it wasn't able to do that successfully today, just because on the news that came out yesterday from the Snap that their major ad revenue won't be able to cover the expectation for the next quarter, which dragged down major stocks and which dragged down the indices as well. Now let's come over to the options flow for the AMC. Now I've increased the premium to max and see what exactly the whales are doing. Now these whales were buying way too much out of the money call option. This individual was buying $25 call option. This can expire in 181 days. And these are 4,900 contract, and he's paying $1.3 million for it. He seems to be like extremely confident, and that's a cross trade. That means there are a lot of brokers, those who are betting on this $25 call option, which is way too much out of the money. And the kind of market scenario that we are having right now, I personally believe that is not possible for AMC to reach $25 in this kind of a market. We might have to wait before we have some sort of a severe downtrend, and then we might experience. Now when I bring down the premium a little bit and see what exactly the mini whales are doing, now majority of them are onto the downside, and they are buying all these put options, especially this $90 put option that's going to expire in 545 days. We're a little bit suspicious, but they are definitely onto the downside. Now when I bring up the put to call ratio chart, we can see the put side is 62%, the call side is 38%. The volume on the call side was pretty heavy as compared to the put side, but the premiums are still pretty nice onto the put side, because AMC might keep going down from here onwards. Now let's come over to the options flow for the GameStop. Now I've increased the premium to max and see what exactly the whales are doing. Now these whales were all buying call options, and they're buying deep in the money. This individual was buying $1.75 call option that's going to expire in 181 days, and he's buying 30 contracts, and he's paying $103,000 for it. Majority of them are onto the upside, and they are still very bullish on GameStop. Now when I bring down the premium a little bit and see what exactly the mini whales are doing, now majority of them are again onto the upside, and they're buying a huge amount of contract and betting that the GameStop will keep going up from here onwards. Now when I bring up the put to call ratio chart over here, you can see the 68% is the call side, 32% is the put side, and the volume is pretty significant in the call side. The premiums are pretty good as well onto the call side. Now let's come over to the options flow for the SPY. Now I've increased the premium to max and see what exactly the whales are doing. Now majority of the whales were onto the downside. Now when I bring up the put to call ratio, you can see it for yourself. 62.8% is the put side, 37.2% is the call side. The volume was pretty heavy onto the put side today, as there was a lot of fear in the market after the snaps earning and the warning that they gave to the overall broader market. And the premiums are pretty juicy onto the put side as well. Now when I bring down the premium a little bit and see what exactly the mini whales were doing. Now these $376 put option that came in right after the market close were extremely suspicious, and these are all $376 put and 55 days expiration, and they were all coming in a line, and they are all betting towards the downside for the SPY. Now let's come over to the chart of the SPY now. Now by looking at the chart of the SPY, this gap that we have over here for $401.27 wasn't able to be filled today. But I personally believe that we still have couple of days before we see some sort of a aggressive action coming into the stock market. So we might easily cover this gap over here next week. Now let's come over to the chart of the VIX. Now this is a volatility index which indicates how much fear is there in the market. So there is the fear is has been dying down significantly after we have been experiencing some upward momentum coming into the overall broader market. Now today the VIX did bounce off from 2250, which is an indication towards the upside from here onwards. Now next week is going to be extremely volatile. We just have to wait and see how the Fed is going to play along, but it seems to be like the VIX is calling up for a bigger move for the upside. So we just have to wait and see how this is going to play out. Hope so you like my video. Please like and subscribe my channel. I'm going to see you in the next one. Cheers.